You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on in the world of futures options? You know what? If you don't, you tuned into the right show. Even if you do, you turned into the right show. So probably dig into some products. Maybe you're not watching. Of course, welcome to TWIFO This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. And if you like the data-centric approach that we take to this show, you're going to love the newest addition to the network, the Hot Options Report. Man, did we have good timing or what to launch a new show based around the hot options activity? Think midsummer might be sleepy, and then all these meme kids rear their ugly heads again, and bam, we have quite the topsy-turvy world of options. Make sure wherever you're getting this, you're listening to the full network that will get you, of course, the Hot Options Report and nearly a dozen other shows coming at you. And of course, if you want to hear that show done live, as well as get access to Options Oddities, which is the official after party of VolViews, as well as check out, man, if you like this show, our Pro Q&A earlier this week with Rich Excel was awesome. Touched on just about every product category you can imagine. Only one place to get all that good stuff, plus get your name in the hat for the July Pro Trading Crate. TheOptionsInsider.com/pro is the place to go to learn all about that. As we learn all about who's joining us on TWIFO this week, I am pleased to welcome back. Looks like he's threatening to make a triple appearance. Let's start calling him the triple threat here on the network. None other than Mr. Dr. Bix, a.k.a. Russell Rhodes, holding court over there at the Kelley School of Business. Mr. Rhodes, welcome back to the network, sir. Welcome back to TWIFO.
Oh, as always, happy to be here. I was listening in the previous program. I did not realize Henry and I were at the same presentation this week.
Oh,
I didn't see him there. I saw a lot of people, but I didn't see him there. So, I loved the number of Trump mentions from the Bloomberg News. I thought that was absolutely awesome. I use that to look at what retail people are thinking. Now I've been diving deep into contrasting and comparing retail versus institutional and seeing if I can figure out something there.
And as the son of Dusty Rhodes, I'd be remiss if I didn't give you a chance.
I'm pretty upset, brother. I'm pretty upset, brother. Brother, I'm going to tell you, put on a good show with that Rocky Balboa. That was the height of his career. Yeah.
Yeah, terrible.
We're losing him every other day now.
I know. Hitman's all that's left pretty much from the 80s era. Let's hope for the continued health.
Roddy Piper.
He's dead.
Oh, is he? I thought I just saw a picture of him.
He died a long time ago.
Ric Flair.
Yes, Ric Flair is still around.
Sorry.
Ric Flair is still around. He argues.
I know it's one of the effeminate looking ones.
He argues he is great. He argues he is bigger than Hogan. He wasn't. Better wrestler than Hogan. I think that's pretty easy. But not maybe. Yeah, I was probably a better wrestler than Hogan. I never even wrestled. Not a great wrestler, but nonetheless, just a super over personality. And yeah, number one on the Mount Rushmore of 80s pro wrestlers. Now, Ozzy gone the same week, and Theo from The Cosby Show. A bad week for fans of the 80s. What did you do, Dr. Vix? You go away for a few days, and you kill all of our beloved 80s favorites.
No.
All right, let's move on from that. Let's see if we can get a little bit more optimistic as we roll right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you want to see this full chart for yourselves, you can if you follow us over there at Options on the old Twitter/X. If you did, you would see that most markets, most assets seem to be liking this little bit of detente in the trade war, or call it what you will. We're seeing a lot of green on the screen this week. I would say we are about 80, maybe 85% green, only about 15 to 20% red, if that, out there. That said, the largest percentage mover is to the dark side this week. Can you guess what it is? We will get there in a second. But first, to Mr. Dr. Vix we go. You think you can handle a little light side and dark side for the folks, sir?
Oh, goodness gracious. Where are we at?
Did I throw you a curveball? I could do it.
You threw me a bit of a... No, where I look at it, it's too small. All right. What would you like to start with? I want to start with let's go ahead and get that nasty move out of the way.
All right, go for it.
A part of me wonders if Ozzy or Malcolm Jamal or Hulk Hogan was long natural gas. So there we go. All right. Hate to be like that, but so working our way backwards on the dark side, we got heating oil, energy tank, and a lot of people. Heating oil is actually a proxy for jet fuel. A lot of people don't know that, so keep that in mind. If the travel season's not going well, etc., and you're like, which I don't think it. Although we see a lot of videos of people misbehaving on planes, I don't think it's been a particularly strong travel season. I just get that from what I have to pay for hotel rooms when I go back and forth to school. It's down 2.46%, a little less than 2.5%. Oats, I don't even know what oats go into. Down 2.72%. Then we got crude oil, down 2.83%. RBOB, which is basically unleaded gas, down 3.66%. And natural gas, which is that red line is so long. What is that number, Mark? It's gone off my screen.
Nat gas is off 12.99%, so 13% pretty much.
Yeah, that, and hence the name, the Widowmaker.
Indeed, the Widowmaker.
And it's just, I had one small systematic natural gas strategy, and I was warned, and I was warned, and I was warned. And basically, I just got lucky and never got absolutely hammered by it. But my understanding is that's a market a lot of people, if you're going to do anything in it, you want to be very risk controlled. And that's what the option market does for you.
It is wild that we were at a 3.5 in mid-July in nat gas. That just seemed kind of lofty when we were talking about it on the show last week. And it seems like the market realized that as well, sir. They corrected.
It most definitely did. But it's 4 out of 5 are energy. You just keep working your way up. Brent was the 7th worst. 4 of the 7, over half of the bottom 7. We don't do 7, but it looks like energy is just and I don't know if that's worries about the economy or worries about supply or what. It could be a combination of both as well. Going the opposite direction, and I'm very excited about this because we got some of those sector futures, and you know how excited I get about the sector futures. The 1, 2, 3, 4, 5. We got utilities up 2.44%. So basically, if I guess their energy input costs are going down, so everybody likes the utilities. Real estate, surprised on that one, up 2.73%. I used to absolutely love trading currency futures, and it doesn't really. Oh, this isn't a currency one. This is the yen Nikkei, the Nikkei in the yen,
the yen denominated Nikkei. That always throws me for a loop too. Don't worry.
And that's why I'm Joan Rivers and you're Johnny. Up 3.80%. Copper, which heard a lot of talk, and I have a service where they reach out to people for commentary. I probably ought to trade off of commentary requests because I got a lot of copper ones in the past week or two. Copper up 5.27%. And that market that everybody's always talking about, palladium, beat out copper by 7 whole basis points, up 5.34%. So a couple of economically sensitive metals up at the top, whole bunch of economically sensitive energy at the bottom. It's just, I think every program I'm on, we talk about the world confusion. Another world confusion.
World confusion indeed. I'll get to CVOL in a second. I think I've asked you this before, but as the aforementioned Dr. Vix, what is your use case for CVOL? Do you run a lot of these numbers frequently over there, sir?
We need to spend more time with CVOL. What I use is instead of commodity volatility indexes, I actually use the Bloomberg function on that. That gives you the at the money and then the 5% and 10% out of the money in both directions, and a couple of other numbers, but those are the ones that I pay attention to. And the reason I do that, and the reason that I think I'm here on the program, is because I do believe that there's some information in how the skew is shifting back and forth in the futures contracts. That's the only reason that I use something that's slightly different. I want apples to apples comparison. So I'm using the volatility indices that Bloomberg calculates that's proprietary to them, as opposed to looking at CVOL. I do look at that at the money implied volatility again, which is a number that they put out there, and it's a 30-day number, so it coincides pretty closely with the volatility indices that CME puts out. Maybe I should talk to the product guys over there and tell them they need a 5% out of the money and 10% out of the money implied volatility measure.
You don't want any more vol measures that have skew. You're done with skew. You want to go straight to at the money vol just for fun. But let's break down some of the vol action from this week, shall we, listeners? Looking at our list, by the way, you can run this report for yourselves. Just type CME and CVOL into any browser you're rocking. If you're listening close to today, set that high-low range to 1 week, and then we're going to go into the aggregates tab. And if you did that, you'll see that pretty much 5 out of the 7 complexes here we're going to profile are all pinning the needle at or near the upside for the week. So vol, getting a little bit spicier this week. Only 2 dropping this week. And they are at the low end of their range for the week. So interesting stuff. We're going to kick it off in energy. Right about 50 3/4 for the energy CVOL, up about 0.5 point today. That is the high level for the week, the low 48.67. So energy getting a little bit spicier. I wonder why. We'll get there in a little bit, listeners. Below, we have the aggregate commodities CVOL. That's at a 35.62. It's unched today, but that is the high level for the week, the low 34.46. So a 2 for 2 now, pinning the needle to the upside. Then we get to the treasury price vol. That is the actual underlying vol. Yield vol, a bit of a separate beast. That is hanging out right about exactly a 6, off 0.11 today. Pretty close to its high for the week. The high for the week, 6.15, the low 5 3/4. So we'll file that into the gainers for the week as well. Then below it, we have the aggregate metals CVOL at a 20.39, off about 0.15 today. That's coming right off the high for the week, which is 20.5 pretty much. The low 18.5, so about a 2-point range over there on metals CVOL. But we'll file that one into the kind of upside mover for the week as well. Below it, we have one of our losers for the week, the aggregate ag CVOL. 19, pretty much even, off about 1/4 point today. That is the low for the week. The high right around 19 3/4, so giving up about 3/4 point on the week. Below it, we have the FX aggregate CVOL, 8.44, off about 1/4 point. That is the low for the week. The high, not even 8 3/4. So again, FX not known for being a highly volatile asset class, and giving up about 1/4 point just today. And at the bottom of our list is the treasury yield volatility, a wild beast at about 106 1/3, off about 1.6 points today. That is close to the high for the week, which is close to a 108, the low 101 and about a quarter. So wild stuff out there. Speaking of wild stuff, we have to start with the wildest mover on our movers and shakers list this week. So we have to kick it off in energy.
It's time to tap into the deep options of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the wonderful world of energy. CMEGroup.com/TWIFO is, of course, where you can go to run these reports for yourself. Once you're there, go into that asset class drop down. You're going to pop down a couple of slots to nat gas, and then you're off to the races. Hanging out at about a 309, so threatening that 3 handle. Of course, off nearly 50 cents or about 13.5% just since Monday. You go back to the end of our show last week, it's off about nearly 13% as well. And you'll recall, I was talking with Carly about this, Russell's nemesis actually, on the show last week. I was surprised that nat gas was hanging out at a 3.5. That seemed kind of lofty, given where we are in the seasonality and also what's going on out there in the broader energy space. It seems like the market agreed because they caught up in a hurry, wiping it all the way back down to about $3. We were talking, weirdly enough, about 3 puts and 4 calls on the show last week. So I guess if you loaded up on some of those 3 puts, you're looking pretty happy right now. Speaking of action, is it an action-packed week? Yeah, nearly a $0.50 move is probably going to drive some paper in nat gas, and that is the case. Threatening 1 million contracts already, so that's a pretty active week. Roughly 2x what we have come to expect back in the past this time of the show. So things are pretty spicy, and it looks like about 34%, so a little over a third of that paper is going up in the contract. That expires in 4 days, so we're going to hang out there. But before we get there, Mr. Rhodes, obviously nat gas, pretty active, was looking pretty lofty last week, coming back to earth pretty aggressively right now, hanging out close to a 3 handle. What's been catching your eye in the Widowmaker, sir?
On the Widow, the skew is ridiculous. I've never seen anything like this. You do this program every week. I don't do this program every week, but that put skew versus call skew is, have you ever seen numbers that are that divergent? I'm just looking down the skew right there in the middle with the 25-day skew or the 25 delta skew, the put versus the call.
The near-dated stuff is actually flat.
Yeah, the near-dated stuff's ridiculous.
Yeah, that's what's weird to me, yeah.
Yeah, and I've never even seen that with really near-dated stuff, but 25 delta calls with at 0.1, I know there are only a few days left, but those are very cheap options. Yeah, when you start to get a little bit farther out, I guess we're timing the rebound for early next year because all of a sudden you do start to see a flip when we get into December. And one of the things that drives me nuts with the commodities is the December contract expires around Thanksgiving. But that's where we start to see a little bit of a flip. My assumption is that there's a lot of people that are thinking about taking advantage of some seasonality and popping into the call side when you start to get into late this year and early next year. But yeah, that near dated skew, even going out into September, you've got the October contract that expires September 25th, and you got 4.2 versus 1.7. That's pretty significant to me. So if I would never be catching that falling knife, that I would never try to fade a move in natural gas. If somebody forced me to trade it, I would always be going with what the trend is in it. And it looks like there's not a whole lot of people that expect that trend to change, at least in the next few weeks. Yeah, that's how I'm interpreting that one.
This is the flattest, you're right, I've seen for such a big move. This is the flattest I've seen this skew in a while. It looks like, the skew gods are saying maybe they like this level. We're going to vacillate around the 3 handle for a little bit. You got to go all the way out to really, even if you get into the typical seasonal range where things start getting a little bit juicy, late fall, early winter. You go all the way out to December. Those calls are only 5.5% bid. So that's typically where you start seeing that seasonality kick in. And it's not quite there. Even to November, those calls are close to flat. So I guess the bright side of that is if you were looking to scoop some upside in nat gas going out through the end of the year, you're not paying a huge vol premium to do that. That said, the vol level's around a 60, so it's not cheap. It's not expensive. It's right about along the lines of where we've seen nat gas. Obviously, we've seen nat gas get much higher. So I guess if you want to argue, if you start breaking into the mid to low 50s, things are getting maybe a little bit cheaper from an at-the-money vol perspective. But yeah, good news. If you want to roll the bones, I guess, on some upside or even some continued downside, you could go out pretty far and not pay a heck of a lot of premium from a skew perspective to do it. It's not till you get to January and winter proper where we see that skew kicking in. Then those calls are about 14% bid. That future is also at a 4.25. So obviously a lot loftier than it is right now. But yeah, you could go all the way out to December if you want to play some upside and not really pay a heck of a vol premium to do it. So that is, you're right, Mr. Rhodes. That in and of itself is interesting. I can't recall nat gas giving you pretty much either direction for nothing. You could really do a lot with that. I guess suppose if you can't make up your mind, Mr. Rhodes, you could just buy the strangle and you're not paying a ton for it right now. Yeah, wild stuff out here. What is lighting up the tape out here in nat gas this week? If you said 3 puts going out in about 4 days, you are the winner chicken dinner. 60,000 of those bad boys going up, mostly closing throughout the week, which makes a lot of sense. Of course, we are plummeting towards that 3 strike pretty aggressively. So we said last week we saw a lot of action in those 3 puts, and clearly folks are taking them off this week, which makes a heck of a lot of sense. You have the 3 puts falling out of bed towards your strike. You're taking some profits off the table, and that's pretty much what we saw. The big day was Wednesday, almost 21,000, mostly closing there. About 12,000 on Tuesday, also closing. 16,000 on Monday, slightly opening, so maybe some folks were starting to feel the move. They started diving in there. And then about 11,500 going up today. By the way, if you're wondering, what are these bad boys trading for right now? These, again, they only have about 4 days to go, listener, so they're fairly cheap. So I guess if you wanted to take a flyer, it's about a nickel, 4 cents for those bad boys. So if you think we're going to break that 3 strike to the downside in the next few days, then maybe that's your huckleberry. But folks, getting the heck out of Dodge on those bad boys. And then behind it, we have going all the way out, listeners, to, it looks like about 4 calls are close to the 3 half calls. Let's do the 3 half calls first. Those are also in September, expiring in about 4 days. They went up nearly 30,000 times this week. The big day for those was also Wednesday. So Wednesday, obviously a big day for nat gas options, nearly 13,000 contracts on the tape, mostly closing. So folks apparently getting the heck out of Dodge there. 7,700 on Monday, about 6,000 on Tuesday, only 3,100 going up today. But going out a little bit, listeners, to the 4 calls in September, these have a little bit more time to go. These have until obviously about 33 days. These going up 27,000 times, mostly opening. So that's interesting. 4 calls, and we thought those were out of the money last week when we were hanging out at $3.50. Now they're hanging out at pretty much $3. So those 4 calls looking even more distant. By the way, if you're wondering, they've been trading lately average price of around 3 cents. So I guess if you think nat gas has quite the run in it over the course of the next month, you could take a flyer, though the 4 handle looking pretty distant. Mr. Rose, anything catching your eye from a flow perspective out there in nat gas this week, sir?
No, it seems pretty even as far as it. I mean, we've got that big volume I shouldn't say big volume, but I'm just looking at the trade volume. For some of the out of the money calls, there's still some put activity as well, not nearly as much. I see somebody, it looks like they're opening up buying, and this is not exactly a massive trade, but it's a big trade relative to the open interest. I see somebody buying the September 270 puts today for a little over 6 cents. So they're expecting further downside or extended downside. And also somebody stepping up to buy some of the 280 puts. So not necessarily done to the downside, or at least some people thinking we're not necessarily done to the downside. We'll see. That's why we have a market.
Gun to your head, you got to go 270 or 280 puts versus 4 calls, but
I would do that.
Just mathematically and inertia-wise, you got to lean towards those. People are wild. That's what makes the market odd. That's why our skew is flat, which is weird. Since we're hanging out in energy, and it is number 3 to the dark side this week, our old pal WTI, off nearly 3%. Let's roll over there really quickly. WTI hanging out right now, right about the 66 handle, which is interesting. It's pretty close to where it was this time a week ago when Carly's been talking for a while about that 65 level. And if we blow through it to the downside, then maybe a bit of lookout below. Again, hanging out right now, 66. So still hanging out right in the middle of that 60 to 70 range. So we'll see if we can get any direction. We know for the Lions' share of this year, outside of that little dust-up period in the Middle East, most of the impetus has been to the downside in crude. It'd be interesting to see what we can see going forward that will give us some upside impetus. Right now, treading water. Volume-wise, also about what you'd expect, about 400,000 contracts on the tape. Nearly half of that, about 45%. Going up in the SEP contract that has about 22 days to go. So we will hang out there. By the way, what is the vol in the SEP WTI? It's at about a 30. And the SEP vol in nat gas, if I didn't mention, it was right about a 60. So you're talking about 2x nat gas versus WTI. Mr. Rhodes, anything catching your eye in the Texas tea this week, sir?
It looks, and I'm just making sure I'm looking at this right. It looks like, again, I want to go a little bit further out than before. So many freaking option expirations. Whose fault is that?
I think it's your fault.
It still looks like there's concern about downside. Which is interesting because that 65 level has been strong. It gave way in mid-June or a little in the last few days of June, and then we got right back up there. And it has been very much of a line in the sand going back. If you just look at the continuous contract, we've been doing a 65-70 range with a few breakouts, almost a year now. I mean, I see where she gets that level. I've seen her in a couple of other spots talking about that 65 level for crude. There's another person that I get along with a little bit better than Carly, who focuses in on crude, and she's been talking about the same level as well, which makes me, if a lot of people think if the consensus is 65 and 65 is going to hold, we start breaking 65, and everybody's on one side of a trade. Might actually be the time that level gives. And we haven't moved much higher than I'm looking really close. It looks like we've not spent a whole lot of time over even 67.5 this month in July. So we're close. We've been hugging that 65, but we haven't had the type of reactions where we tested 70 after we bounced off of it, which makes me a little concerned and makes me wonder if that level's going to hold. I said I would trade natural gas with a gun to my head. I would totally consider buying some 62.5, 60 puts or something like that on crude right now. I could easily see it break into the mid 50s.
Yeah, you're not wrong. It does seem like we've been talking about that 65 level for a long time. In crude, we got, obviously, with all the dust up in the Middle East, we flirted with the low 70s, but right back down to the mid 60s right now. Let's dive in. Let's see what some of the flow is. This won't surprise you, Mr. Rhodes, that the 65 puts in September were leading the dance. It's like they were listening to the show last week. You're right. A lot of people have been lined up on that 65 strike for a long time. It is a very important psychological level out there right now. 65 puts going up nearly 17,000 times this week. Again, that's in September. The skew out there in September, the puts about nearly 4% bid, so a slight premium there. The calls are pretty much flat. So again, if you agree with the sentiment for Carly or Mr. Rhodes that if we do break 65 handle, might be lookout below, then you're not paying a heck of a premium. The market isn't really showing us that they are pricing a huge explosive move to the downside. So if you do a little bit of a nibble there, it's not going to cost you an arm and a leg. Right now, 65 puts, like we said, trading about 17,000 times this week. Since we're hanging out close to that strike, it seems like folks were mostly closing. The big day was Wednesday, about 10,000, again closing. 3,100 on Tuesday, 1,000 on Monday, and 2,400 today against an OI of 24, about 25,000. If you're wondering, what does a SEP 65 put go for right now? It's nearly $2, about $1.94 out there. So a little bit juicy, but then again, you are getting some time out there. Compared to what we're talking about in the equities, you're getting a whole 3 weeks plus out there, which is an eternity in most products out here right now. So there you go, listeners, a little bit of put action. If you want to go a little bit farther out, you want to test some downside, the SEP double puts are trading for a whopping 19 cents right now. So if you want to save some money and maybe get a little bit of a lottery ticket, 55, that'd be a pretty aggressive move if we blew through that. But crazier things have happened. Let's look really quickly, see if we see any other interesting and or parent paper before we roll on out of WTI. Yeah, the 70s were actually trading this week a little bit as well, also in September. The big day also Wednesday, obviously Wednesday, just an energy day out here this week, listeners. Nearly 5,000 contracts on the tape, mostly opening them. 2,500 on Monday, 1,100 on Tuesday. Opening on Monday, closing on Tuesday, and less than 1,000 today against an OI of 21,000. So, folks, opening on the 70s on Wednesday. If past is prologue, folks usually tend to buy their upside in WTI. So, it's interesting for folks if they were indeed buying 70s out there. But interesting stuff. How would you be lining up in crude oil right now? Would you be just watching? Would you be loading up on a little bit of downside right now? Would you be maybe playing contrarian and going upside? Again, the vol isn't super high and the skew isn't super rich in either direction. So you can do a lot of things out here, which is fascinating. Speaking of a lot of things, we have a lot of different products we can go to next. Mr. Rose, you did point out copper, so we could get base to mix things up next, or we can go somewhere else. What is catching your eye, sir?
Well, let's go look at copper for just a moment. I did want to one little thing with respect to oil. I like to spend time with the Commitment of Traders report, and speculative positions there's twice as many long speculative positions as short right now. And going along with what I was saying about that 65 level, that maybe it's attracting buyers, but it's not getting going. So there you go. And eventually those buyers got to sell. Oh, there. Now now that I've gone off topic too many times and I've used all of my mulligans, let's go to copper.
All right. To the land of the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, pop out of that energy drop down. You're going to go up, or I should say down all the way to the bottom of our list, pretty much to metals. This is normally where we'd hang out in precious, talk some silver, maybe some gold, but no, we're going to go past precious. We're going to go all the way down 3 slots to the base metals. We're going to get base, listeners, and we're going to kick things off in copper. I say it all the time. I sound like a broken record, but it is fascinating to me how this product, which not that long ago in the early days of this show, listeners, was not quite a trade by appointment product, but not quite a volume-heavy, retail-friendly type product, how it has transformed. Nearly 50,000 contracts on the tape this week. So if you've been intrigued by copper in the past, there is flow, there is liquidity out there. You could actually actively trade it. And where is the action out here this week? Nearly 50,000 contracts. A little over a third of that going up in the SEP contract, has about 33 days to go. Hanging out at a 582 in that future. If you've been listening to all this trade war madness, that obviously copper is in the bullseye zone for tariffs. That's been driving us north. It's up another 4% just since the start of this week. You go up, I should say, go back to the end of our show last week, up about 5.25%. And it seems like, what is the vol right now in good old about 1 month to go copper? It's interesting. The term structure is strange. Almost a 40 on the SEP contract. That's up nearly 3 points, about 39.6. But some of the nearer data stuff, you go out a week, and that's pricing in a heck of a lot of juice. That's at a 50 right now. So again, makes some sense given how topsy-turvy we are with the tariffs, that maybe the near data stuff would command a bit of a vol premium. And nonetheless, things are looking juicy. And in the, at least in the near dated portion, if you're looking in the SEP time frame where most of the paper is going up right now, skew wise, we are seeing a little bit of a bid to the puts, about 5.5%. So maybe showing us that maybe folks think we're going to turn off this eventually. A discount to the calls, nearly 7% discount. So you're looking at a little bit of a modest equity skew out here, which is interesting. Maybe at least skew wise showing us that maybe we've reached the upper band, at least for now. Paper starting to fade this upside move. I guess we'll find out. Mr. Rhodes, what are your thoughts on the tariff-driven copper market right now, sir?
Yeah, my understanding is part of this is being driven by people trying to hoard stuff before the prices go up. And what you can see is you've got that September, and you mentioned I think you mentioned the 6 strike calls. We're getting a lot of interest with the September contract. If you go out to the December contract, it's the 5 puts, which I wonder if that's almost a fundamental view. I don't know if tariffs count as a fundamental view. I guess they do, because it's economic stuff that impacts the price of commodities. But it does look like it looks like maybe there's some folks that think when we start to reach toward the end of the year that people will have enough copper, or the price might start to tail off a bit. The other thing with respect to copper, and I think this is why at times it doesn't get a whole lot of love or interest, it really is a great proxy to economic activity. And when there's more uncertainty with respect to economic activity, copper is one of those contracts that'll zigzag all over the place on you. If you think that we're going to end up in a global slowdown, regardless of what's going on tariff-wise, et cetera, you would expect lower copper prices, just lower demand across the board. Right now, I really do think that we're going to go through where all of us academics are going to have really cool case studies in a couple of years about artificial demand that and how prices reacted to artificial demand that is based on, for lack of a better way to put it, news items. So that's what I am pulling from the option market there. What we saw with natural gas as well, where maybe toward the end of the year, there's an expectation of a reversal, but for right in the opposite direction. But yeah, I see people apparently betting that copper will start to give it up maybe come the end of this year, early 2026, which I can't believe I've made it to 2026.
You're right. Those 5 puts in December kind of caught my eye as well. They are the most active contract out here this week, which is wild. You'd think it would be some upside, but you're right. It is these 5 puts. I was just trying to dig while you were talking to see if I could find some prices. It turns out it looks like it wasn't just a straight 5 puts. It was a couple of put spreads going up, mostly on Wednesday. It was the 5-4-7 put spread going up for about a nickel, opening on both legs. And then we have the 5-4.25 put spread going up for obviously more, about double that, listen, about a dime, almost 11 cents. So a couple of downside put spreads seem to be, of the two, I guess I probably would like the 5-4. Give yourself a little bit more room to run than the 5-4.70. That seems like
it's cheaper.
Yeah. I mean, it's cheaper, but what do you get? Yeah. You get not much room. 5-4.70. Why bother? But
yeah. Well, you pay a dime to make a quarter.
Yeah, I like the dime one better. Yeah, definitely. Dime one better of the two. So there you go, listeners. It wasn't just straight 5 puts. It was actually 5-4 quarter and 5-4.70 put spreads going up. A total of about 1,800 on the 5 puts, and then about 800 and change on the 4.70s, and about almost 800 and change on the 4 quarters as well. So equal size, which looks like they couldn't make up their minds. So they bought both spreads. And also the 6 calls were trading earlier this week for about 23 cents. So there was some upside trading. That was actually the number 2, and those were in September. But it was those D's 5 puts that kind of took it, which would also explain we're seeing some bid to that put wing start kicking in, and that would explain that as well. Let's go back to September, because that is where 36% of the flow went up this week. And it seems like it was mostly 6 calls. The big day for those was on Wednesday, about 1,700 of those, mostly opening. 2,500 total on the week, so the rest scattered throughout the week. About 600 on Tuesday as well, mostly opening there. Also, some action on the 4 3/4 puts, going up about 1,500 times this week, including about 1,200 on Wednesday against an OI of 1,500. So it looks like they were opening out there as well. Let's see if I can look really quickly. 4 3/4 puts, listeners, to see what they were going up for. Oh, those were going up on Wednesday as well. Looks like that was a risk reversal. 4 3/4, 6.5 risk reversal traded for 5 cents. A lot of nickel, a lot of crazy nickel trades going up here earlier this week. So wild stuff out here. Mr. Rhodes, anything else catching your eye in copper? If not, where should we hang our hats next?
No, nothing was really catching my eye on that. In fact, I was trying to dig on the exact same trade, and you beat me to it. Last copper trade, I was digging around and looking at the size and checking a couple things, and you beat me to it on that one. I was surprised. You don't like when I bring up this market, but I was surprised with the interest rate markets that there wasn't more going on, just with all the commotion in DC. But then also we do have the FOMC next week. And it's not so much what they're going to do next week, but we're looking at a little over a 50% shot of a cut at the next meeting. And I think we might get some guidance around that. So I was surprised that one thing that the Treasury vol with C-vol was down, but also that I was surprised that the C-vol was slightly down. I know it's at the higher end of the range, but I would have expected that to have been creeping up.
Yeah, it hasn't been the most active week in rates. We were talking a little bit about the futures volume yesterday, and not a ton going up. You're right, we're in between things at the moment. So that probably is to blame for it. If you want to go to rates, we can, but again, not much flow going up out there.
We haven't done equities lately when I've been here. And what's fun with the equity indices when you're around earnings season is you get a little bit of different behavior out of NASDAQ than you do at S&P and RUT.
To the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the topsy-turvy world of equities. Pop out of metals, you're going to go up 3 slots to equity indexes. In product family, you're going U.S. Index E-mini. Then in the product category, you're going to go to the old NASDAQ 100, a.k.a. the old NQ. Haven't hung out there in a little bit. Doing about 117,000 contracts on the tape, so not exactly the unchecked, untamed beast that the E-mini is, but also a little bit easier to parse the signal from the noise out here, which is nice. Mr. Rhodes, you said NASDAQ kind of performing a little bit differently during earnings season. What did you mean by that, sir?
Oh, typically the implied vol on NASDAQ relative to the S&P 500 and the Russell 2000 tends to be a bit elevated as we go into earnings season. In fact, if you trade NASDAQ on NVIDIA earnings day, which is an off-schedule company, you get the same sort of results with respect to the options being a little bit higher price than normal using the short-dated option contracts. So just seeing that, of course, we've got higher put skew than call skew for the NDX options, but it tends to increase a bit going into earnings as well because it's just a higher risk period. And looking at some of the bigger trades and some of the more, I don't want to say longer dated contracts, but one of the more standard type contracts, you do see, I'm just looking at the month end contract, the July 31st contract, which everybody gets judged on their performance as of the end of the month. And people are thrilled to have those available. That you've got the 22,300 puts is the most active one. As far as open interest goes, you got the 22,400 as the most active volume with the index at pretty elevated levels. So just look at what I would be looking for and kind of scouring are most of the trades worried about the downside? Is there lower call skew relative to put skew where maybe some people are selling calls to buy the puts? Not seeing that like you normally see, where you'd see people maybe collaring and giving up some upside for some downside. So the call skews are the call implied vols with the out of the money options is staying relatively elevated when you compare it to the put skew. And they don't reverse, but they seem to be in a pretty good level relative to each other, especially when you start to get into August.
Yeah, looking at those right now, and you're right, those 22,400 puts, which is a little ways out away from where we are right now in the NASDAQ listeners, 23,400. So got a little ways to go by the end of the month. Trading, you're a few hundred contracts. Looks like a lot of that on Monday. Paper opening, a lot of that on Monday and on Tuesday. So maybe some folks putting some puts in their back pocket. We've talked about this on a couple of our other shows, Mr. Rhodes. I might as well get your thoughts on it as well. People have thoughts on the cost of protection right now, the skew out there versus where it's been historically. What are your thoughts, not just on NASDAQ, but also maybe S&P?
It hasn't, the options have not looked particularly overpriced to me, at least relative to the last 2 or 3 years on the put side. And the reason that I start with that is when the puts start to look expensive and the cost of hedging makes people pause, that's when you start to see spread trades, or as one of my mentors would put it, people selling expensive options to pay for the expensive options. And I don't think we're seeing as much of that as we've seen in the past. It might be just because implied volatility has started coming down. I also feel, and this is when things start to get a bit hairy, it does feel like when I'm going through block trades, and mostly on the index spot, but when I'm going through block trades, I'm not seeing as many hedging trades. There's an exhaustion of paying up for protection. And we're seeing that with the equity implied volatility indexes coming down now as well. But you're also seeing it with more straightforward option trades as opposed to putting on maybe selling an out of the money call or buying a put spread, selling the out of the money call in conjunction with buying a put. So it just feels very complacent. It's like everybody knows stocks are expensive, but they just keep going up. And if that continues to happen, I think you have the same case that we had with CalPERS back in 2019 or so, where they stopped putting money into tail risk strategies. They're like, why do we keep wasting all this money on hedging? If you've been hedging since the middle of April, you've just been giving up some performance. And people start throwing the towel on those sorts of things.
You've been throwing away some money, certainly since April 8th. We did talk about some longer-term paper, but obviously NASDAQ is not immune to the zero-day flow. In fact, if you add in today's paper going out in a few minutes and tomorrow's going out a full 24 hours, that's roughly 2/3 of the flow for the week in NASDAQ is expiring by then. 41% today, 23% if you add in tomorrow's amount. So yeah, 64+%. So again, 0-day flow. Some of it makes sense. We're at around 23,400. So the 23,400 calls, obviously lighting up the tape today, doing about 2,000 contracts. Weirdly enough, the 23,000 puts by themselves have been pretty active all week long as well. Nearly 1,000 yesterday and nearly 1,000 again today with an OI of about 600. So there's opening paper on those, which is interesting given that the clock is clearly ticking and we got a ways to go on those. So lest you think the 0-day stuff not infecting NASDAQ, it is everywhere, NASDAQ included. That music, I should say, listeners, that music means we have come to the end of our journey here on TWIFO this week. But Mr. Rhodes, before we go, if you have any other thoughts on maybe Equity Vol or any other products that are catching your eye that we didn't get a chance to mention on the show, have at it, sir. The floor is yours.
No, I was just with respect to, I've been doing a lot of work on 0DTE options. And I put something out a couple of weeks ago on how the NASDAQ index options have been behaving. And I don't want to say I got hate mail, but I got an awful lot of, why aren't you doing the same work with the CME versions of these 0DTE options? And a lot of, I prefer to trade these. Partially, people like to trade them because you can do it with a non-securities account where you don't have that pattern day trader thing going on. So I've started getting more and more inquiries about the 0DTE, S&P, Russell 2000, and of course NASDAQ options, and being told that I need to be doing more work in that area because retail and ProTail is doing a lot more in that space. And what you mentioned, that goodness gracious, just looking at the volume and the distribution of the volume, it is much more skewed to the short dated side in the future space than it is in the pure index space. Might be a better method of taking short-term positions like that.
You got hate mail? I refuse to believe it, sir.
I get hate mail all the time.
You need to bring them out of the woodwork for whatever reason.
I do. I'm a very polarizing individual.
How can you hate that face of Dr. Vince?
Well, nobody can see me.
Yeah, that's true. Meanwhile, if the folks, we got some good folks out there. The folks want to send you some nice thoughts, some nice emails, or just reach out to you on social media with some compliments. Where should they go? What should they do?
My Twitter is the best place to find me, and I do check my DMs even from people, the ones that fall into the box that doesn't pop up immediately. And it's at Russell Rhodes, RHOADS, 2 S's, 2 L's in the Russell part. I apologize. This Hulk Hogan thing has really hit me hard.
It is hard.
Partially, we hadn't even been able to reload our death pool yet.
Yeah, everyone was waiting for that third name.
So quick.
And usually the third name is an also-ran person. It's not another titan of the 80s, if you will. So that one, that kind of was a gut punch. Even if you didn't like Hogan, I wasn't more of a Warrior guy myself. So when Warrior beat him back in the 80s, I was celebrating. But even then, you can't ignore, there's really no pro wrestling like it is today. Certainly no 80s pro wrestling without that guy. He was over in a way that modern guys wish they could be. Maybe if you take The Rock and John Cena and you smush them together, maybe you could get a hint of what Hogan was in the 80s. He was bigger than all of them. It was crazy. And that was just from wrestling. Everyone knows The Rock and John Cena, mostly from their movies now, but he was huge just from wrestling, which is crazy. Yeah, obviously he did the bit on Rocky too, but yeah, just wild stuff out there. A terrible guy, but top of the Mount Rushmore just looking at pro wrestling, he's definitely number one on that Mount Rushmore. So wild stuff. And of course, the Prince of Darkness, Ozzy. Can't forget about him. I almost went to that farewell concert. I thought about going there, but I had to get my passport renewed and couldn't get it in time. And then, of course, the tickets sold out in 5 seconds anyway, so I would have missed it anyway. But Metallica, Ozzy, all these great things. It was a good one.
That was a night you want to be there.
Yeah, and then, of course, he literally passed away about 2 weeks later. So wild stuff out there, listeners. Also wild stuff in store on the network. The Hot Options Report has been tearing up the charts. It'll be coming at you in about exactly an hour, so if you're hanging out in the live, we'll be back to talk all that fun in a little bit. Then I have to give Mr. Rhodes his voice a rest, because he's back with me tomorrow talking all things Vol on Vol Views. We did kiss a 14 handle in VIX Cash today, so we'll have some fun to talk about. I can see him shaking his head already. I like to tweak him, listeners out there, but all sorts of fun to be had on the old VIX front and Vol front, so join us for Vol Views tomorrow. If you're hanging out in the Pro, we'll be back after that for the official after party known as Options Oddities, and then back one final time after that to close out the week with the Hot Options Report, then back again next week all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.